Hey guys, and welcome back to another demo video. So this is for chapter 2, right? So for your homework, you have to do problem 2-10A and problem 2-12A. Well, guess what? We have B problems, right? So I'm going to go ahead and do 2-10B, okay? So bear with me. This video might be a little choppy. I have Camtasia. It's a screen recording software, and I'm not too good on the editing, so I apologize in advance. So hopefully hopefully it won't make you too sick. Okay, so the first thing we got to do is we need to set up Excel, right? So all your homework got to be done in Excel. I'm going to show you how to create a general journal within Excel. This allows us to just basically create our journal entries, okay? So you remember in video 2, we talked a lot about debits and credits and assets, liabilities, and the owner's equity accounts, right? How do we increase? How do we decrease? Well, it all depends on what type of account it is and if it's a debit or a credit, okay? So first thing we're going to do is make sure that we set up our Excel spreadsheet properly, okay? So if you'll notice, I'm here in cell reference A1, and I'm just going to type in date, okay? Well, usually helps if you can spell as well. Date, okay? Remember, accounting is a record-keeping system, so we have to keep track of all our financial transactions or all our economic events in chronological order, okay? So that's why we have our date column here. And then what I'm going to do is I'm going to create some space so we can go ahead and put in our account explanation, okay? There's no real set form. I'm just arbitrarily going to pick a number of columns. I'm going to go, you know what, let's go 5, okay? Again, no reason behind it other than I just need to make sure I have enough room to fit my account names in there. Once we select B1 through F1, what we're going to do is we're going to click Merge and Center, and then we're going to click Left Align. The next thing we want to do is format all these cells below that B1. We want it to be identical, meaning we want B1 through F1 to be all merged into one, and we want them to be left centered. So if you'll notice, my mouse looks like a little crosshairs, right? That's because I'm at the bottom right corner of this cell. If I just click and drag down, it's going to format all the cells beneath that B1. I'm just picking an arbitrary amount, okay? I let go. Now if you'll notice, all these cells are all merged and centered left align, okay? So in B1, I'm going to type in account, right? Because I'm going to put my account names here. G1, I'm going to make this my debit column, so I'm just going to abbreviate and say DR period. In H1, I'm going to say CR period, so this is my credit column. Now, as you will soon realize, when it comes to spreadsheets, I'm a little anal, in just because spreadsheets are cool, right? So I'm going to center my debit and credit so they show up in the middle of the columns here. The next thing I want to do is I want to make sure all these numbers are formatted correctly. So I'm going to select G in H. I'm going to come over here and I'm going to select my comma style. And it's going to give me 2 decimal places. We don't need any decimal places. So what I'm going to do is I'm just going to click it twice. So that means that any number we put in here now, notice the comma is there and there's no decimal places, okay? So we're all set up, ready to go for our general journal, okay? Now, the second thing we need to do is create ledgers, right? Because we create journals, we do our journal entries, and then we post them to the ledger. Now, to make this a lot easier on us, we're going to do T accounts, okay? Ledgers are identical to T accounts in as far as what they do. They show all the debits, all the credits for a specific account, and they give us the account balance. Okay, we're going to do T accounts and not actually create the ledger because it's, number one, it's going to be easier for us to see. Number two, it's going to be less formatting that we have to do on our Excel spreadsheet. And let's be honest, we're not here to format an Excel spreadsheet. We're here to learn accounting, right? So the T account is perfect. So let me show you how to create a T account, okay? I'm going to come over here in J1, K1. I'm going to merge and center these, and I want to put a bottom border, okay? First account usually is always going to be cash. And then I'm just going to pick an arbitrary number of rows here. And I want to put my left border. So I just created a T account, okay? Now we need to do these for all the accounts we have. Now, you're doing problem 2-10A. I'm working on problem 2-10B, okay? So right off the bat, they tell us, Tory Mann began Mann World Processing Services in December of 2015. The firm provides word processing services for business and is currently operating with leased equipment. Okay, so that means instead of buying equipment, all they did was rent equipment. Okay, notice they say here on January 1st, 2016, the assets and liabilities of the businesses were. So they tell us what their cash is, what their accounts receivable are, what their accounts payable are, what their notes payable are. And they tell us that, hey, in the beginning, we're going to assume they have no retained earnings, okay? They tell us that the common stock balance is $9,500, and they give us the following transactions, okay? So this information that they give us is very important, and we need it because we're starting off by saying, hey, our cash balance is $6,400. As we go through January, guess what we're going to have to do? We're going to have to journal or make our journal entries, right? Cash is obviously going to be hit, but we need to calculate the balance at the end of the period, okay? So these are very important. So if you'll see here, it says set up accounting equation in a columnar form with the following individual assets, liabilities, and equities. We're not going to do that. So for part A, we're just jumping right into journal entries, okay? Show the impact of an increase or decrease. Well, by debiting or crediting, you're going to show, does it increase or does it decrease, okay? So we're not going to use this format per se. We're going to get right into our debits and credits because at the end of the day, that's what we need to know, okay? So what I'm going to do is I'm going to go ahead and start plugging this information into the spreadsheet, right? So we have our cash. They tell us it has a balance of $6,400. And I'm just going to go ahead and format all these columns with the correct number format. Okay, so I did cash. Now remember from the video, we said that left side is the debit side, right side is the credit side. Okay, so why in the world did I debit cash? Well, cash is an asset. Assets increase with the debit, decrease with the credit. Debit is the normal balance side for cash, okay? I'm going to do the same thing. I'm just going to skip a column here, and I'm going to do accounts receivable. So I'm going to format it the same way, right? I want to merge and center. I want my bottom border, and I'm just going to select, an arbitrary number of rows just to make sure I have enough room for the problem. And I'm going to abbreviate and say AR. It just stands for accounts receivable. If I go back to the book, I see that the accounts receivable balance is $7,500. Okay, so I'm going to plug in $7,500 on the debit side of accounts receivable. Why did I do a debit? Because accounts receivable is an asset. Assets increase with the debit, decrease with the credit, debit's the normal balance side. So this beginning balance here, $7,500, is correct, right? It's an asset. Normal balance side of all assets are the debit side. Accounts receivable is an asset, right? It's a resource for us, okay, is the company. The next one we have is accounts payable, okay? It says our accounts payable is $900. So I need to create the T account for this, or the ledger, for lack of a better, well, even though we're not doing ledgers, we're doing T accounts. Again, same thing. I need to create the ledger or T account for accounts payable. So I'm going to come over here. I'm going to skip a space. I'm going to do the same exact thing. Merge and center. I want my bottom border. I'm going to arbitrarily select a number of rows, get my left align, and I'm going to abbreviate and say AP, okay? Accounts payable. Accounts payable is a liability. It is an obligation to the company to provide some service or sacrifice some asset, right? Meaning I either have to pay somebody something to satisfy this obligation that we have, or maybe provide a service or something, okay? So accounts payables are liabilities. How do I increase a liability? With a credit. How do I decrease a liability? With a debit. Liabilities have a normal balance side as a credit. So I need to credit accounts payable for my $900. And I'm going to plug that in, okay? The next liability that we have is our notes payable. So I'm going to go ahead and create my T account here. Very easy to do. And I'm going to abbreviate, and I'm going to say N/P for notes payable. Guess what? Notes payable are a liability. How do we increase a liability? With a credit. How do we decrease a liability? With a debit. What's the normal balance side of a liability? The credit side, or the right side. So we see that the notes payable is $3,500. I need to plug that into my T account. So on the credit side, I'm going to say $3,500, and we're good. Okay, so let's go back. The next one we have is common stock. Okay, the common stock balance, they tell us, was $9,500, and these are our beginning balances. Okay, so I need to create my common stock T account. So I'm going to go right next to notes payable, merge and center, bottom border. I'm going to create my T account. And I'm going to say common. Okay. Common stock is pretty much it is an owner's equity account, right? So how do I increase common stock? Well, guess what? I increase it with a credit. I decrease it with a debit. Credit is the normal balance side for my common stock. So I'm going to type in my $9,500, which is what it was, and we're good to go, okay? So we have our beginning balances, right? What we need to do now is start doing our journal entries, okay? So the first one we have, paid rent on office and equipment for January, $900, okay? So as we're reading these economic transactions, first thing we need to do is recognize, A, what two accounts are we hitting? Okay, that's number one. Number two, we need to recognize, is it a debit, or are these accounts debited, or are they credited? Third thing we need to know is, what's the dollar amount, okay? So the great thing here is that if we just read this economic transaction, we know exactly what accounts we need to hit. We know exactly what the dollar amount is. The only thing we really need to think about is, do I increase it with a debit or decrease it with a credit, or vice versa, right? So paid rent on office and equipment for January, $900. Well, it says paid. So right off the bat, that's cash. Cash has to be the first or one of those accounts. Okay. Well, what did we pay? We paid rent, right? Well, whenever we use an asset or an asset gets consumed, right, it turns into an expense. So we are using cash to pay for our rent, both for office and equipment. Well, that's an expense because that asset is being used up. Okay? So right off the bat, we have cash and rent expense. For what's the dollar amount? $900. Okay? So when we do our journal entries, debits always go first, credits always go second, and the credits always get indented. Okay? So I need to put my date. Well, 1/1. What's the first account I'm going to hit? Well, debits need to go first. What am I debiting? Well, let's think back. Well, expenses increase with a debit, decrease with a credit. Debit's the normal balance side for an expense. Well, what am I doing here? What am I doing here? I'm increasing my expenses. Okay? So, I need to debit rent expense. For how much? $900. Okay? Next thing I need to do is I need to enter in my credit. Well, I'm paying cash. Cash is an asset. I decrease an asset with a credit. I increase an asset with a debit. Okay? So, in order to get my indent, I need to come up here to my ribbon and I need to hit increase indent once. I'm going to type in cash for $900. Okay. Now, notice we don't have any pluses or minuses. We don't use those. Okay. Especially in accounting. We only use debits or credits in this stage of the game. So once I do my journal entry, I need to put in an explanation. What am I doing here? Right? Well, I'm paying my office and equipment rent. So paid. I'm just going to make it short and say paid rent expenses. Okay. So the next thing we do is we need to post this to the ledger. Okay. So the first one we have is cash. Cash has a credit of $900. All I need to do is go to my T account, which is cash, and I need to post this credit for $900. I'm done. Okay. I now need to post rent expense. Well, the rent account or rent expense account did not have a beginning balance. So they didn't tell us to create it, right? But we're using an account called rent expense. We need to create that T account. So what I'm going to do is I'm going to come down here underneath cash and I'm just going to create rent expense. Okay. Again, I want to put my bottom border and I'm just going to arbitrarily pick a number of columns here, number of rows. Looks like 5, maybe 6. I'm going to put in my left border. So I have my T account and I'm going to post this debit, $900. Okay. So now we're ready to do our second entry. So let's go figure out what we have to do. So on January 2nd, we collected $8,200 on account from clients. Okay. Because we see on account, that means that somebody had owed us money previously. They are now paying us that money. Okay. So we basically collected cash from somebody that owes us money. What do we need to do? Well, right off the bat, we need to recognize that we're going to do our journal entry, and please always skip a space between your journal entries. So this date was January 2nd. So on January 2nd, I need to figure out what two accounts are going to be impacted. Well, I collected $8,200 in cash, so right off the bat, cash is going to be collected, okay? The next thing I have is, well, I collected money on account, right? Previously, I provided somebody a service, and I have revenue, right? I gave somebody $8,200 worth of service. That person said, you know what? I recognize that I owe you money, but I can't pay you now. I'll pay you later. And we say, okay, not a problem. We'll extend that person credit, right? On our books, we book an accounts receivable, right? That says that we are entitled or we have the right to receive payment for something that we already did for somebody. In this transaction, what we're doing is we're recognizing that somebody is actually paying us. We don't owe, or they don't owe us cash anymore, okay? They don't owe us anything because they're paying us. So we need to increase our cash and decrease that accounts receivable, okay? How do we do that? Well, on January 2nd, we know our cash is going up, okay? We know cash is an asset. We also know that accounts receivable is an asset as well. So what we need to do is we need to increase one asset, decrease another asset. How do I increase an asset? With a debit. How do I decrease an asset? With a credit. So I'm going to debit cash for, I believe that was $8,200. And I'm going to decrease my other asset, accounts receivable. I'm going to do that with a credit. So I list my credit second, I indent, and I type A/R for accounts receivable. And I type in my $8,200, okay? We now need to say, what happened here? What's the explanation for this transaction? Well, received cash on account, right? Somebody owed us money. We booked it as a receivable that we're expecting cash. Well, guess what? That time has come and we are receiving the cash. So what do I need to do next? Well, I need to post it to the ledger. Well, we're using T-account, so it's basically the same thing. So I have cash debit for $8,200. I need to plug that in. $8,200 cash. Accounts receivable. I have a credit of was that $8,200? Yeah, it was. Okay. So my accounts receivable is going down by $8,200 and everything's posted. Okay. So we're going to skip a space and we're going to go back and we're going to see, okay, what's our third transaction? Third transaction said borrowed $5,000 from a bank and signed a note payable for that amount. Okay, so what are we doing? Well, we're getting cash, right? Cash is an asset. Since we're getting cash, that means an asset is increasing, okay? We are signing a note payable, right? Notes payable are a liability, okay? So we're saying, give us cash now. We'll sign a note that says we have an obligation to repay you money at some point in time in the future, okay? Keep in mind, as we go through each of these journal entries, these beginning balances are added to the information that we're putting in our T accounts, okay? So I need to book a $5,000 by showing that my cash is going up and my notes payable is also increasing because now I owe somebody, particularly a bank, $5,000. So let's go do the journal entry. So I'm going to skip a space. Thought it was 1-3. So I already identified my accounts, right? Cash and notes payable. So what is cash? Cash is an asset. I increase an asset with a debit. I decrease an asset with a credit. Debit's the normal balance side. Now, what is my cash? What is happening to my cash? It is increasing, so I have to increase it with a debit. Sorry, I should have typed cash there. Okay. How much is it going up by? Well, $5,000. Okay. Now I need to add my credit. Okay. Notes payable is my credit. So I'm just going to abbreviate NP, right? $5,000. Okay. Now, remember, for these journal entries, we always have to have a debit, always have to have a credit, and after each entry, debits and credits always have to equal. Okay. So you might be saying, well, I can't remember that liability. Do I increase it? Do I decrease it with, a debit or a credit? I can't remember. Well, that's okay for now, because cash is an asset. I increase an asset with a debit. So by default, notes payable has to be a liability. It has to, okay? And then we stop and we think, oh, okay, well, notes payable is going up, so I must be increasing a liability with a credit, which is true. So we're going to go ahead and post these to our ledger or our T accounts. So the first thing I'm going to do is I'm going to find cash and post that debit of $500 to cash. Sorry, $5,000. Okay, so this journal entry is posted. Now I need to post the notes payable. Well, I have a credit entry to notes payable. I go to my T account. I find notes payable. I credit it for $5,000. Okay. So I already had a note payable for $3,500 at the beginning of the month. I'm adding an additional $5,000 to my notes payable. Okay. So again, let's put in our explanation. Got to have explanations. What are we doing here? Well, signed a note for $5,000. We're done. Okay. Next thing we need to do, always skip a space. Let's go look at the fourth transaction. So on January 4th, what we did is we billed clients for work performed on account. $9,150. Okay? So remember, we got three things. First, we got to figure out what the dollar amount is. Well, that's easy because they tell us $9,150. We need to figure out what two accounts we're going to hit. Okay? We're performing work. We're performing a service. We just earned revenue. So revenue is the one account, okay? What are we getting for performing revenue? Are we getting cash? No, we're not. The reason why is because it says we billed clients for work that we performed on account, right? We said, sure, we'll provide you with these services of $91.50. You need to pay us. Client says, I can't pay you right now. I can pay you later down the road. Okay, not a problem. We have a right to receive cash or money. That is an asset to us. That is accounts receivable. Okay? So my two accounts are accounts receivable and revenue. So let's go do the journal entry. Okay. So we'll skip the year. Okay. First thing I need to recognize is, what am I getting? Well, I'm getting accounts receivable. I'm getting revenue. Okay, great. What is accounts receivable? Well, accounts receivable is an asset. Okay. Is my accounts receivable going up or going down? Well, it's going up, right? Because I'm showing that somebody owes me money and I'm waiting for them to pay me. So accounts receivable is going up. Accounts receivable is an asset. I increase an asset with a debit. I decrease an asset with a credit. For an asset, debit is the normal balance side. So I'm going to debit accounts receivable. So it's going up. By how much? $91.50. So by default, revenue has to be credited. Okay, so I'm going to increase my indent, type in revenue, and I'm going to credit it for $91.50. Okay, now you might have said, well, you didn't do your little spiel. How do you know revenue's increased with a credit? Well, before I even did that, I knew that I had a debit. I knew revenue was the next account. I know that by default, because I debited revenue, I have to credit I know by default, because I already debited accounts receivable, I know revenue's the second account. Revenue has to be credited because I need a credit. But how do we increase revenue? With credits. How do we decrease revenue? With debits. What's a normal balance side of revenue? It's a credit side. Okay? So I'm going to post these. Well, I'm going to go to my accounts receivable T account. I'm going to enter in my $91.50. I'm good. I need to post revenue to the ledger. Well, if you notice, I don't have a revenue account here. I need to create one. So that's what I'm going to do. I'm going to say merge and center. Revenue. I'm going to make sure I have my bottom border. I'm going to select just an arbitrary amount. What I got there? 5 cells, that's fine. I'm going to put in my left align, and I'm going to post the credit of $91.50 in revenue to the T account or to the ledger. Okay? Keep in mind as I'm going through this, we're using T accounts. Technically, we should be using ledgers. T accounts are just a little easy for us to use, especially to format. So if I say ledger, we're using T accounts. Right now, I'm using those two terms interchangeably. Okay. So what we need to do is go back to our journal, and we need to put in an explanation. What do we do here? Well, perform services on account. Good. Okay, let's go look at our fifth transaction. So let's go see what it is. On January 5th, paid $400 on accounts payable. So what happened is we previously got something, right? Maybe we got supplies, whatever, doesn't matter. We didn't pay that person or that server or that company at the time. We said, you know what? I'll pay you later. Okay? Not a problem. Originally, we booked an accounts payable saying that we owe somebody money. That's a liability. It's an obligation for us to pay somebody in the future. It's time to pay the piper. So what's the dollar amount? Well, it's $400. Problem tells us, right? What two accounts are being hit? Well, this is easy. Paid, $400 cash. Cash is being hit. What's the second account being hit? Well, we paid accounts payable. Those are my two accounts. So let's go do our journal entries. So let's think what we're doing here. Cash is 1. Is cash increasing or decreasing? Cash is decreasing. How do I decrease an asset? With a credit. Okay. Let's look at accounts payable. So cash right off the bat is my credit. Accounts payable has to be my debit by default. So I'm going to debit AP for, forgot the dollar amount, $400. Okay? Now, let's think about this. Accounts payable is a liability. How do I increase a liability? With a credit. How do I decrease a liability? With a debit. So I'm debiting accounts payable to decrease it. I'm paying cash. Cash is an asset. How do I decrease an asset? With a credit. I'm going to indent, and I'm going to type in cash, and I'm going to credit it. Okay? So now, we're ready to go ahead and post these to the ledger. The first one I'm going to pick is my accounts payable. I already debited it, right? I don't even need to think at this point because I already did my thinking, right? I just need to post $400 debit to the accounts payable T account. So I go find it and I post $400 debit, right? It's on the left side. Left side's always the debit side. Right side, always the credit side, okay? Next, I need to do my cash. Same thing. What did I do in my general journal? Well, I credited cash $400. Okay, just post it to the T account. So I'm going to go to my cash T account. On the credit side, I'm going to type in $400. That's it. Okay. Now we need to say, okay, what did we do? What's the explanation here? Well, we're paying on account. So made payment on account. That's it. Skip a space. Now we can do the next transaction, which happened on January 6th. So let's see here. Received invoice for January advertising, $750. Okay. So what happened here is that we received an invoice for advertising for $750. Okay. Did we pay this? We did not pay it yet. We just got the invoice. So we incurred an advertising expense, but we didn't pay it yet. We're going to pay it. Okay. We need to book this transaction. So right off the bat, we need to identify first the dollar amount. Well, it's $750. That's easy, right? Second thing we need to do is identify which two accounts. Well, I'm not paying anything, right? But I owe somebody money. I have an obligation to pay somebody for advertising that we got, okay? Since I have an obligation to pay, that is an accounts payable. So that's my first account that I'm going to use, accounts payable. What am I paying for? Well, I'm paying for a service. What service did they provide me with? Advertising, right? So in this case, advertising is not an asset, right? Advertising is, we're going to recognize it as an expense, okay? So advertising expense, accounts payable. Perfect. We identified two accounts and the dollar amount. Now let's go and do the journal entries. So I'm in the general journal here. First thing I got to do is figure out, what do I debit? Well, I know I have advertising expenses. I know expenses increase with the debit, decrease with the credit. Debit's the normal balance side. So I'm going to go ahead and debit ad expense for, I forget the dollar amount. Sorry about that. $750. $750. Okay. So I'm not paying cash yet. I'm just recognizing that I have an expense. I'll pay it later. That's an obligation for me to sacrifice an asset at some point in time in the future. Okay. So I'm going to credit AP for $750. Now, I know accounts payable is a liability. I know I increase a liability with a credit. I decrease a liability with a debit. Credit's the normal balance side. So I'm going to go ahead and post these now, right? Ad expense. Well, let's post ad expense. Well, do not have a T account for that yet. So I'll just go ahead and create one. So I'm coming underneath rent expense. I'm merge and centering. I'm going to type in ad expense. I want to put in my bottom border. I'm going to arbitrarily just pick a number of rows here, put in my left align so I can create my T account. And I'm going to post this. Well, the journal entry said that I had a $750 debit. So under add expense, debit side, $750. I need to post the transaction to the accounts payable T account. No problem, I can do that very easily. What did I do in my general journal here? Well, I credited accounts payable for $750. Guess what? I just got to put that in a T account. That's it. So I go to my accounts payable T account and I post the credit of $750 to accounts payable. Okay? And that's it. So now I got to go ahead and type in a explanation in my ledger here. So what happened? Well, recognized advertising expense. Recognized ad expense. That's it. I'm good. Next thing I need to do, skip a space, and I need to get ready for the next journal entry. Well, that happened on 1/7. What did we do on 1/7? We paid January salaries, $3,750. So just by reading this, we already know the dollar amount. We can easily identify that, $3,750. What did we do? Well, we paid. Cash was hit. What did we pay for? Salaries. Okay, so we are using an asset, which is cash. Because we're using an asset, that means we are incurring an expense, right? So what I'm going to do is I'm going to go ahead and say cash and salaries expense are my two accounts. What's the dollar amount? $3,750. Let's go ahead and do the journal entry. I know without a doubt cash is an asset. I increase an asset with a debit. I decrease an asset with a credit. So cash has to be my credit entry. Debit expenses increase with the debit, decrease with the credit. Okay, so I need to debit my salaries expense because I'm increasing it. And I apologize, I forget the dollar amount. $3,750. So $3,750 debit to salaries expense, and I'm going to credit my cash. Remember, debits go first, credits go second. Indent your credits. Cash, $3,750. Now I need to post these. Okay, so cash is the easiest one. I'm going to go ahead and post cash. I see we have $3,750. I'm going to post that to the Cash T account as a credit. Next, I need to find my salaries expense. I don't have that T account, so I just need to create it. So I'm going to merge and center. I'm going to create or type in salaries expense. Make sure I have my excuse me. Make sure I have my bottom border. I'm just going to pick an arbitrary number of rows. I'm going to pick 4. Put in my left border. I have a T account. I need to post that debit of $3,750 to my salaries expense. We're done. So we got our post. Now I just need to put in an explanation. What did I do here? Well, paid January salaries. And I'm done. Okay? Skip a space. Always skip a space in between your journal entries. 1/8. Well, what I do on 1/8? I don't know. Let's go find out. On 1/8, I paid January utilities, $320. This is identical to what we just did. Paid cash for utilities. Well, we burned an asset or we used up an asset, so we have an expense. My asset needs to go down. My expenses need to go up. How do I increase an expense? With a debit. How do I decrease cash? Credit, right? How much? 230 bucks. So let's go make it so. Okay? So first thing I'm going to do is I'm going to go ahead and I'm going to type in my utilities expense for how much? 230 bucks. I'm going to credit my cash. Remember, credits always go second. Make sure you indent your credits for 230. Now I just need to post these, right? Well, cash is the easiest one, so I'm going to go ahead and post my cash. I'm going to credit it for $230. If we look at our T accounts, I don't have a utilities expense T account yet, so I need to create one. So I'm going to come underneath my salaries expense. I'm going to merge and center. I'm going to type in utilities expense. Make sure I have my bottom border. Make sure I have my left border, so I have my T account. And I'm going to post that debit of $230 to the utilities ledger. Now, I need to say in my journal, what did we do? Well, we just paid January utilities. Okay, always skip a space. Let's see what we did on the 9th. On the 9th, we paid stockholders a dividend in the amount of $2,600. Okay, that's pretty easy. What did we do? Paid cash. What happens when we use up an asset? Well, we have an expense, right? We're expensing that asset. Well, what expense did we pay here? Dividends. For how much? $2,600. So we're just going to make it so, right? We're going to go do our journal entry. So I know cash increases with the debit, decreases with the credit. Cash is going to be credited for the $2,600. I know that I'm using an asset, so I must have an expense. Dividends expense. I'm going to debit that for the $2,600. I'm going to credit my cash. Remember, debits first, credit second. Always indent your credit. Type in cash. Credit it for $2,600. Now I need to post, right? I'm going to do cash first because, well, that's easy for me. I see that I have a credit to cash in the journal entry. So I'm going to post it to the ledger. I'm going to post it to the T account. Credit for $2,600. I'm going to do the same thing for dividends expense. Don't have a T account yet for dividends expense, so I'm going to go ahead and create one. Again, merge and center. Get your bottom border. Type in dividend expense. I'm just abbreviating. Make sure you put in your left border so you can make it look like a T. And post that debit of $2,600. Beautiful. What do we do here? Well, we got to go ahead and put in an explanation. Well, since we debited dividends expense, credited cash, we basically paid a dividend. So I'm going to say paid dividend. Pretty easy. Okay? Now the last one we have is on 110, right? So let's see what we do here. They tell us that on 110, we purchased a fax machine on January 31st. That makes no sense. Why they would do that? Why would they would tell us on the 10th that on January 31st we posted it or we purchased it. Maybe we're not going to take delivery until January 31st. Let's just assume that. Okay. So what happened here? We purchased the fax machine for business use. it cost us $1,750. Okay. So what two accounts are going to be affected here? Well, that might not be too clear. So let's look at the dollar amount. Well, dollar amount's super easy, $1,750. Okay. So we purchased something, a machine, for business use. It does not say that we purchased it on account. Okay. If it said we purchased it on account, we would have to do accounts payable or something. Since they gave us the dollar amount in dollars and did not say on account, we paid cash for it. Okay, so we kind of have to read between the lines there and say, well, purchase fax machine for the business use, $1,750. We paid cash for it. Okay, so cash is an asset. How do I decrease an asset? With a credit. How do I increase an asset? With a debit. So my credit is going to be to cash. What's my debit? Well, what am I getting? I'm getting a fax machine. I'm getting equipment, right? I'm getting a piece of equipment. So equipment is going to be my next account, right? So let's go make it so, right? So first thing I'm going to debit is equipment. This is an asset account. Assets increase with a debit. I believe they said it was $1,750. What am I giving for this? Right? Well, I'm using cash. I'm using an asset to buy an asset. So I'm increasing one asset, decreasing another asset. So I'm going to decrease cash. And I decrease it with a credit. Okay? I'm going to go ahead and post my cash transaction to the T account, $1750, excuse me. I don't have an asset account yet called equipment, so I'm going to make one. Very easy. Merge and center, put in my bottom border, say equipment. And I'm going to put in my left border here just to make a T. Okay, so I need to go back to the journal. I see that I have a debit to equipment for $1,750. Just need to make it so, right? Post it to the ledger, post it to the T account. $1,750. Okay? Remember, equipment is an asset. I'm buying an asset, so I'm increasing my assets. So I need to debit equipment. The last one we have is on January 11th. And let's go see what we did. January 11, we paid $150 to bank as January interest on outstanding notes payable. So what happened here is we borrowed money from somebody, particularly a bank. I guess the name of the company is bank. Okay, so we used cash to pay this bank for the privilege of borrowing money, right? That's basically what interest is. A bank charges us, whether it's a corporation or individually, a certain percentage for the right to use that money. That's what this is. So we paid $150 to bank as January interest on the outstanding notes payable, okay? What two accounts are going to be hit here? Well, definitely cash, because we paid $150 in cash, right? Is our notes payable going down here? Well, no, because we're not paying on the notes payable. We're paying the interest of that notes payable, okay? So because we are using cash to pay the interest, we have an expense. That expense is interest expense, okay? So let's go ahead and do our journal entry. So the first account I have is interest expense. Expense is interest expense is an expense. How do I increase an expense? With a debit of $150. And I need to credit my cash. For $150. I need to post these to the ledger. Okay, no problem. Credit cash 150. Oh, darn. Don't have an interest expense account. Got to create one. I'm just going to copy and paste the previous one. It just makes it easier on us. You could do the same thing as well. Just make sure you change your information. So I have interest expense in the amount of $150. Okay. So now the next thing I need to do in the problem is they tell us, remember, we're not doing A, right? Or let me rephrase that. We're doing A, but we're not doing it in column form. We're doing it in journal entry form. Okay. Next thing we need to do, it says show the impact, increases or decreases on January transactions. Well, we already did that. Okay. So here's what I want you to do in your assignment. I want you to total each of these accounts out. Okay. So here's what I'm going to do. I'm going to go to my cash account. I'm going to put in a bottom border all the way across. Okay. Now I know cash should have a debit balance, right? So I'm going to add up all my debits, add up all my credits, and subtract them. Okay. So to do that, I'm going to say equals. I'm going to open parentheses. I think I can do it this way. Sum. Oh, nope, cannot do it that way. Nope. Okay, so we're going to actually have to enter these in. So we're going to say equals. And just click on your debits and hit plus. Close parentheses, subtract, open parentheses, and then we're going to add all the credits. And if I do this correctly, we're going to get our cash balance of $98.20. We're going to do the same thing with our accounts receivable. So I'm going to do the same thing. I'm going to come down here. And I know accounts receivable should have a debit balance. Well, I know that debits increase an asset. Credits decrease an asset. So I'm going to do the same thing. I'm going to add up all the debits and credits for accounts receivable so I can determine what the ending balance is. Okay, so I'm going to add up my debits. So I open parentheses, select all my debits, close parentheses, minus, and then I'm going to, well, I only have one. I'm going to select my credit, hit enter, and I see what my balance is. I'm going to do the same thing with my accounts payable, right? Now, accounts payable, increase with an asset, decrease, or I'm sorry, accounts payable, increase with the credit, decrease with the debit. Credit's the normal balance side. So that I'm going to do the same thing, right? I'm going to add up all my credits. So equals, open parentheses, and select each debit, close parentheses, minus my debits, because my debits decrease the accounts payable. I owe $12.50. So at the end of the month, I still have an obligation to pay somebody or a bunch of people $12.50. Okay? Going to do the same thing with notes payable. Now, notes payable is nice because guess what? We didn't make any payments. Notes payable just kept going up. So I'm going to auto sum this. Okay? I'm going to do the same thing with my common stock. And you can do the same thing with rent, which we only had, or all the expenses, we only had one, so we're fine. Okay? So that's what I want you to do in problem 2-10A. Okay? 2-12. I'm going to go through this one with you for you. Let's see, what do they want us to do here? Falling teeth counts the number of entries. Consulting business. Okay. Give a description to each of the 9 numbers. Okay. Oh, okay. Yeah, you can do this. You can do this because we already did this in the last episode or the last problem, right? So let me just give you a quick example. Look at 1. We credit cash, or I'm sorry, we debit cash, credit common stock. Well, Valerie invested 20 grand in her personal funds into the business. Okay, let's look at 2. Well, we credit cash for $4,800, so we need to find another 2 here. Office equipment, $4,800. Well, what do? We credited cash $4,800. We debited office equipment. So what's the explanation? Used cash to buy office equipment. Okay, we could do the same thing for 3. 3, office supplies has a debit of $2,800. Okay, so let's find 3. Where's the other 3 at? Accounts payable. Well, what's an accounts payable? It's a liability. It's credited. So we're increasing accounts payable, increasing office supplies. What did we do? Bought office supplies on account. Okay? So I think you should be okay on this one. If you need help, please do not hesitate to text me. I would be more than happy to set up a Zoom meeting, or we can do a big blue button meeting, whatever. The point is, I'm here to help you. Let me know what you need. We'll figure out a way how we can facilitate getting together, online or whatever. Okay? So I apologize. I know this video was a little long, but I wanted to go through the entire steps and really kind of keep regurgitating assets, increase with the debit, decrease with the credit, liabilities, increase with the credit, decrease with the debit, as well as demonstrating how to read the information that pertains to an economic transaction and how to interpret that. Okay? If this is as clear as mud, you know what to do. Just text me. We'll get together. We'll talk it through, and we'll go from there. Okay? So good luck. You're now ready to do your homework. If you have any questions, again, please don't hesitate to reach out. Thanks, and have a great rest of the week.